Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you?
Hey man, doing great.
We're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Like and subscribe to all of our pages, our Investor's Guide of Memphis Real Estate, Spotify, YouTube, Facebook, wherever you listen or want to watch. Show sponsors are listed on the screen below. For those of you that are listening, Will Griffin with Griffin, Clift, Everton, and Mashmeyer, CoreLand Financial, CrestCore Property Management, Triumph Construction, and Local Title. We could not do our business run this show without those sponsors, so please like their pages as well. Zoom calls, I've thought about bringing back some Zoom calls. If we're still interested in that, let me know. I'm not getting a whole lot of feedback about it. So if you're interested in those, Dean at CrestCore.com. I help buyers and sellers every day. Dean at CrestCore.com if you have anything to buy or sell. I think we had some questions pop in.
Yes.
Want to answer
yeah,
that? We can
man.
ask. We've asked you guys to ask any questions that you would like to on any of the social media platforms. We're monitoring those, and we're going to come back and try to answer those questions here live on the podcast, so we can try to be a little bit more informational and get that out to you. What's the first one you have?
Yeah. Someone on YouTube asked, question, if you had $10,000 to start out in your 30s, how would you recommend getting started?
Well, that's you can go a bunch of different directions. I think the first one that I would recommend, and this is what I've talked to people about with either limited funds or a certain amount of funds. Start off with something safe, meaning let's find something that's going to work the first time. Yep. You don't want to swing and miss with a limited amount of cash on your first one. So I would, if you're limiting cash and this really needs to work, I would take your time first. Look at a BRRRR property. Come in and borrow from CoreLand Financial, and try to flip a property, BRRRR it. Maybe you sell it, make you 10 or 15 grand. I mean, the first thing I would probably do is try to flip a few properties to build up that capital reserve. The next thing I would try to do, if that wasn't an option, you just wanted to get into a buy and hold situation, with $10,000, you're going to be super limited on a down payment. You're going to be super limited on anything like that you can do. So coming into the market and just saying, hey, I want to buy my first rental with 10 grand, I think is going to be tough. I don't know that you'll be able to do that. So with just the 10 grand, I'm advising let's flip, let's build that capital reserve a little bit. You can also, if you wanted to buy and hold, I think CoreLand has do they have a little bit longer term program now?
Yeah.
Okay. So you can come to CoreLand Financial and use their longer term program. So if you wanted to keep it for, how long does that go out?
60 months.
So there's
5 years.
That's plenty of time for you to get, collect some cash, refinance with a bank later on. So that's what I would do with just 10. Now that we're talking this all the way out, now with just 10,000 in cash, and you don't want to BRRRR or flip to build that cash reserve up, I would go to CoreLand and borrow the money and do a longer term buy and hold. And then when you built and established yourself, and you had 3, 4, 5 of those, I might at that point look to refinance out to a cheaper interest rate. But at that point, you would have 5 under your belt, and it would not be nearly as hard to get that loan from the bank. And if we buy them right and we're getting them distressed and putting some work into them, you might actually have some equity into them. That's what I did.
Yeah.
So
that's right.
If you're asking me that, I was probably in that same situation. I bet I had 10 grand when I bought one, and I used CoreLand Financial for my first 12 or 13 houses. So
that's awesome.
I started them that way, and then I took all of those with the equity to a bank.
Yeah.
That's a long answer.
Thank you. That's good.
Yeah.
There's some good stuff in there.
Yeah. Do we have one more?
If you want it.
Let's do it next week. All right, look, single family versus multifamily today on the podcast. We are going, that's a big question that I get often is, what do you think about multifamily in Memphis? And then a lot of times when I give my answer to that, the buyers will ask me, well, why single family? So our market in a whole, they developed our multifamily properties in the 50s and 60s.
Yep.
And when they did, they were in closer to the middle of the city, right? Because they needed the housing then. And there hasn't been a ton of multifamily development after that. We don't have, because of where we're located, our land, we can just spread out. You go to places like Dallas and Miami and Houston and places in the city where they just have run out of room. They have to
Now
build
they're going up. Yeah, now they're going up.
So we're not in that phase, and that's why another reason why we don't have a whole lot of duplexes, right? We just haven't. We have room and we've had the land to build. Will that come in the next 20 or 30 years? It might, as our city grows out. There might be a bigger need for some vertical housing in the city, but as of now, we don't need it. So what happens is when there's none developed, or not very many developed, they're older in the older parts of the city. So then that means that the rental rates are going to be lower. You're going to get a little bit more challenging tenant base. I don't say that you can't make those happen, right? There are areas of town, especially where we're at here, where our office is. You can have multifamily over in the Sparkler area and it really work well. Yeah. Right? The tenant base over here is strong. It's just kind of this area of town. So some challenges with that 500 to 700 tenant base. If you've ever talked to me before and you've asked me what would you not buy, or what is the base that you would buy, I never tell investors to go below like an 850, 900 rental, right? Yep. Maybe even 1,000 anymore, right? So if you're getting into the 500 and 700 rental range, the challenge is going to be constant turnover, late payments. No payments, evictions. That tenant base will probably be a little harder on the property. And then the actual locations here in the city where those are just not where you would buy single family. In most cases, this is not a huge one stroke of the paintbrush. Right. Okay. I'm just talking in generalities and most of my experience. So talk a little bit about the challenges.
I think
you've owned more than I don't own them, and you've owned them and have had some success. And so talk a little bit about kind of the challenges. And
I think you talked to some of them. I kind of would just kind of go back on to kind of where you're talking about tenants. And a lot of times when you have it, you have neighbors, right? With single families, you have neighbors, but they're not renting from the same place and they don't have the same landlord. So here you've got, if you have trouble with the tenants, with one tenant has trouble with another, you are all of a sudden brought into that conversation. You're brought into that conversation. I think one thing you might talk about it later about just upgrades in general. So I'll save that for there. Yeah. But sometimes doing work. If you replace something, we'll get into that. Yeah. It's hard to do it for both. To me, there are a lot of challenges. You've always got a vacancy. You said that. Always. The neighbors are always a challenge. Upgrades have to match all units. Yep. So you forget about parking lots. You forget about stairs. You forget about it's a bigger property, so the fencing is a lot more costly. Again, you think, I'm getting all this spread across these number of doors, but those are big capital expenses that come up over time. Right. Again, a parking lot, a fence, a roof, a stairs.
You would think when you own that property, you're going to have to replace the parking lot once and probably the fence once, right? I mean, the entire time you own it? Fence maybe more. Right.
Yeah. I think that these things will be more regular than you think.
Yeah. And that's one thing no one ever factors into. That's right. Security gate. Yeah. Lighting.
Yes.
You got to light the place up.
And again, we're not talking Class A apartment complexes.
No.
That's what we don't have those here. That's why we're saying this. This is B minus to C minus. And so you're talking about the trash can, the trash collection. People drive. I mean, like you said, some locations. I mean, you're going to have your dumpster full with other people's trash, not the residents' trash, but tenants' trash, but people from the neighborhood who are like, there's a dumpster. I'll put a mattress in there. I'll put a couch in there.
100%.
So, I mean, it's just
very hard to control.
It's tough.
Yeah. So there's another example. I'm going to talk about this one. We had a property that came up on Poplar, and I had an investor that was going to buy it, and it was a 20-unit place, and for $1 million, a little over $1 million, but it needed $700,000 worth of rehab to it, and it was vacant, all of it. So the challenge there is like what you mentioned. It's like not only does everything have to be uniform, but when you get one unit ready and you have 19 to go, who the hell's moving to that one unit?
Nobody.
Okay. If you've got 4 units ready and 16 are still under work, who's moving in? Maybe nobody. Yeah. Right? Even if you went half, maybe if you could get these first 2 or 3 going, I guess my point to that is you've got to understand that this is a long game, and you need to have some capital reserves and understand that this doesn't happen quickly. Everything needs to be in that situation done at once, completed at one time. I've flipped a multifamily property before, and I'll tell you this here in Memphis, and it was in 38127, and we got out of there. And it was a success, but man, the challenges that we had all along the way with the rehab and vandalism and trying to make sure theft, and because you had to it was a 16-unit place and we had to rehab them all. So after we got through 12 and 13, we could start to occupy them. But man, we were having to watch those units like a hawk. We were paying people in the area to look out. It was an entire process. So. Yes. Not everyone in Memphis are like that, but that is some of the examples of the multi-properties here that we have to do with. Let's see here. One aspect of a multifamily that a lot of people don't think about that could factor in is if you only have that one multifamily property and you've bought it in an area of town that for now is good. What happens if that goes bad?
Then changes
in the neighborhood and the zip code. I mean, if there's job loss in the area, maybe a company, moves out of that area, and all of a sudden now, you're having a hard time filling it. It's putting a lot of your eggs in one basket. That's one of the reasons why I chose or single family, is because I could diversify where they were located in case one area went bad. But location, I guess, would be kind of the factor here in Memphis. It's like, hey, some of these are not in areas where you're going to want to be in long term. I mean, I would buy in 38122.
Yep.
I would buy any multifamily in obviously Bartlett.
Mm-hmm.
I would buy any multifamily in Cordova if you could find it.
I was going to say, you're not finding multifamily in those places.
There's nothing in Germantown or Collierville.
No.
You're not even going to find. You can find, there's some multifamily stuff in Bartlett. There's some of those condo type places where but as far as a one unit with 25 complexes, you can't find that. It's in the inner city. So single family now on the other end of this, which I don't have a ton of notes for because we know it
right.
Single family to me gives me all kinds of diversification.
A lot of options.
I don't have all my eggs in one basket. If an area of town goes a little further south and I want it to, I can get rid of those properties and move on to the others
pretty quick.
My tenant base is a lot stronger, right? I think I average 1,300 now, 1,400 now. So, my tenant base would be a lot stronger than that 700, especially the 600 and 500.
Yep.
Talk about why you like single family and why, I think you have both, but you dominate single family.
Oh, gosh. No, I've gotten out of the multifamily for me because I'm trying to focus, again, just kind of to get more economies of scale for myself in single family. And, I like single family for a lot of the reasons you said. There are multiple exit strategies. If you need to get out, you can sell to a homeowner or you can sell to an investor.
Yeah.
So, or yes. So, the renters, as you mentioned, it's a higher rent. That's usually a longer term that people stay in houses. We just had somebody in the property management who's been there 40 years in a property.
In yours?
In a property, 40 years. I haven't owned it 40 years.
But he's been there
owned
for 40.
It 12. And I guess they were there, long time before that.
One of the things that we didn't talk about
go ahead.
versus single family,
yeah.
It's easier in my mind for single family for you to raise the rent.
Yes.
I think if you have a portfolio of single family houses, they don't communicate with other tenants. You got a one unit place, you go up $50 on somebody, word spreads fast.
Again, we talked about that earlier about with the neighbors. It's really hard. And it's, with single family, you don't have that. You don't have the neighbors you have to deal with.
No.
There's just a lot. It's easy. You don't have to. Again, here's what I was talking about earlier. If something happens in one unit and the air goes out and you replace it, why didn't you replace my air? You upgraded theirs, but mine's going to go out now. My water heater, my window got busted and you couldn't match this, so now you had to go back with this, and now you got to match. Now you're ununiform across the board with storm doors, security doors.
Oh, it adds up too.
I've seen it done. That's how, And again, with the single family, you can make it more uniform because it's just one unit.
That's right. And you don't have to answer to anything else. There's nobody else that's worried about it. It's just that one. So
again, not that you want to treat tenants differently, but it's just a hard. it's something that makes it more challenging to have multifamily versus single family. And it's just like a headache you don't have to have with single family.
With all these reasons we listed, and the 12 in the what is this 24 in the 13 years I've been selling investment real estate, the investors that I have seen purchase multifamily versus single family, the success rate is wild.
Yeah.
My multifamily guys usually exit out of here super fast. Even if I tell you up front, hey, this might not be a bad idea, they're out of here quick.
Yeah.
Even my most successful multifamily sale over here, 78 units in Berkeley. He sold it after 3 years.
Yeah.
It just was too much. I mean, even though it was a cash cow for him, I mean, it's just like, holy cow, some of the things that you were talking about it just became too much. So those are some of our reasons for single family versus multifamily. I mean, if you came to me and said, Dean, I'm diehard multifamily in Memphis, we can find something here that makes sense. I mean, we have a competitor of ours that buys multifamily, it's just, so there's somebody that can make this make sense. But if you come to me and you said, hey, how do I get started in Memphis? I'm not going to tell you to start with multifamily. No.
Single family, here you go. It's much easier to finance. We don't need to talk about that. So there's a lot of great.
Again,
to me, for where our investors are, it just makes sense. You've got so many more options with single family and building your portfolio and getting started and going that way than trying to dabble in multifamily when you can be an expert in single family.
Anytime I've ever seen anybody dabble in real estate, they fail. You got to be good at one thing. That's another podcast.
Yeah.
Guys, thanks for listening today. Dean at CrestCore.com. If you have any questions about today's podcast, post them on your social media platform where you listen. We'll answer those questions next week. Talk to you soon.